S&P Global is in advanced talks to buy IHS Markit. The deal values the latter company at $44 billion, making it the second biggest in the year. Joining us now for more is our reporter, Joe Easton. Joe, first of all, this is one of the biggest deals, certainly of the year. What does this deal mean for the financial industry?
Yes, good morning. So it's really going to be a transformative deal for the sector. It's obviously the second big deal that we've seen in the industry following LSE and Refinitiv, which we're still waiting to be approved. But if you look at what these companies do, both IHS and S&P, obviously they're most known for their index businesses. So S&P, obviously the equity side, and IHS Markit with the PMIs that we get every month. But behind that, they've got huge data and infrastructure businesses between them. So there's a lot more to it than just the main indices that we know them for. And this is data and information that's used by the entire sector. It really looks like it's quite a defensive move, really, given the LSE Refinitiv deal that I mentioned. That's going to create this huge powerhouse. So it's kind of them looking to regain some sort of more of a balance in the industry, given that LSE is going to have this huge scope across both data and execution once this deal is approved, if it is approved by the European Union.
Joe, how difficult will it be for the transaction to get antitrust approval?
Well, I think that it's quite clear that regulators won't be jumping for joy at this deal, given the size of the company. As you mentioned, the size of just the market capital alone, it's going to be a huge company with a huge reach. And if you look at how long we've been waiting for LSE to get the Refinitiv deal, now this has been going on for such a long time. So I don't think it's going to be easy, and particularly given that IHS Markit has a big connection to the UK as well. So the UK is having to look at this LSE deal, and now they're seeing the market, which is essentially was originally rooted in the UK. So there is big competition concerns in London alone before you even think about the European Union. The positive side is that the S&P and IHS Markit don't have the exchanges businesses that LSE had, so we saw LSE were forced to sell Borsa Italiana in order to just get the approval. IHS and S&P don't have to worry about the execution side. It's mainly the data business, but nonetheless, there's still going to be some big antitrust concerns for sure.